Michael, are you one of those guys who pretends to like bourbon too, just to make me feel stupid, or no?
No, Jim, I've never tried to help make you feel stupid at all.
Okay, good. Thank you. Welcome to the Futures Edge podcast. I'm Jim Urio. As always, we have Bob Iacchino, the brains behind the operation and co-host. And we have an old friend today, Michael Farr, president of Farr, Miller & Washington, chief strategist for Hightower, author of 3 books, perfect hair, usually in a custom suit. But the hair always gets me because you always come across, and I'll tell this to Bobby too, like he looks like the silver fox, the trusted old statesman, but deep down, he's just kind of the same guy as you or I. He just looks a little more polished than us. So Michael, thank you for coming.
I'm neither confirm nor deny. You know, I got this lovely piece of fan mail probably 15 years ago. Dear Mr. Farr, I've watched you on CNBC for years. You're one of my favorites. I live in Washington too. Listen to your advice for a long time. I'm wondering, please, could you tell me where you get your hair cut? My wife, that was it. That was the whole thing. Can you tell me where you get your haircut? My wife really likes your haircut.
That's fantastic.
I'm thinking, okay, I'm going to get a $5 million account out of this TV gig. Finally, no, where do you get the haircut? So I printed the letter and it's on the mirror, at my barber's. He's still got it up.
That's awesome. I think that's fantastic. Okay, we start the show usually with some tomfoolery because we're big fans of tomfoolery. So it's the lightning round. You have to answer these questions. You get 5 seconds. You will be buzzed out if you don't get it right. If you're an old friend, but you will get no quarter from us. First of all, go. Favorite actor of all time? 5, 4,
Tom Hanks.
3, 2. Nice. Favorite movie of all time?
Godfather.
Boy, that's a great answer, by the way. You walk into a bar. What drink are you ordering?
Maker's Mark on the rocks.
Nice. Your wife brings home a dog today and says the dog's staying, but you get to name the dog. What's the name of the dog going to be? 5, 4,
Prenup.
3. Oh, winner.
That's our intro. We got our intro.
That's our intro. Okay, let's roll. We are laughing. It's Friday afternoon. There's nothing funny going on in markets. Today, we saw Atlanta Fed GDP now say that we're not in a recession. As a matter of fact, they knocked their estimate up to 2.4. Stock market didn't seem to like that because higher GDP means we're not in a recession. It means maybe they raise rates. Michael, just make sense of it all. There's no question in there, but just guide us.
The Fed's numbers, the Atlanta Fed's numbers are always kind of strange to me, Jim. There's a wide margin of error in the Atlanta Fed's numbers. It's not that they're not necessarily good, but they're not necessarily consistent. If you look at it just directionally, you see economic strength. And this has been perplexing for a lot of people because we're saying, look, didn't we have 2 negative quarters? Yes, we had 2 negative quarters of GDP growth. We may still have a third, and the Atlanta Fed number might be wrong. So hold all tickets. Don't go to the bank on that yet. But folks are saying, look, it was an inventory issue in many ways that drove the negativity in the first 2 quarters. Maybe it did. But Jim, I've watched this a long time, 35 years in this business. This thing is flapping, it's waddling and quacking. I don't know what you want to call it. I think it's safe to call it a duck.
Amen. So, okay, so the stock market closed, I assume it's only 240, but Bobby, if you have your computer in front of you, it was taking on water as I left. I don't know what's last, but it looks like it's going to close below the June low solidly.
Yeah, we broke below. As I speak right now, the Dow futures, I'm looking at the futures, down 1.23. NASDAQ down 1.12, Russell down 37 basis points. That was up most of the day. And the S&P, most watched, 96 basis points lower.
Yikes.
3606 so Michael, on the S&P right now for live time, 3606 on the S&P. So we've broken through those lows. New lows is what we're hearing. That's the chorus, right? We have new lows. There's new lows.
Okay, new lows. I get it. I'm there. So I actually do think this means another leg lower. I still don't think it's apocalypse because I have believed that market position is a big part of this too. Do you think this is all just getting used to a new rate environment?
Yes and no. I mean, the rate environment, yes, but it's the undefined part of the new rate environment. We don't know how far this thing's going to go. So the Fed is still telling us they're going to change the price of money. That's what they're doing. They're making money more expensive. And they're not going to tell you yet where they think they're going to stop, but they are telling you that they're trying to tame this inflationary beast. We got a hot PCE number. We're going to have more stimulus in January, Jim. Significant amount of more fiscal stimulus in the terms of Social Security dollars. Over a 10% increase in COLA, going to 20% or so of the U.S. population. That's more money to fuel more consumer spending, and the Fed's still trying to fight it. This could get prolonged. I talked to Dr. Jay Bryson yesterday on the Farr cast, which comes out this weekend, and I asked him, because I've been going up against Jeremy Siegel a bit, saying, I know I want him to be right. I want to tell the Fed to pause. I know that suits my book, and everybody's singing the chorus about how horrible the Fed is. Nobody wants their job, okay? But the head of Wells Fargo, Dr. Jay Bryson, says, yeah, we might have to go to 5% on Fed funds because we're still at real negative rates. And that's still ultimately inflationary. Dr. Jeff Lacker, former president of the Richmond Fed, I talked with him yesterday too. He said 5.5%, no problem. And you see unemployment rise, maybe 5.5%. I think that's the intuitive number for me, where you don't have to have wage inflation. That's where you can kind of have full employment without having to keep paying more and more for workers. And finally, Bryson said recession second quarter of 2023.
Okay, so I don't agree completely. I'll ask one more question, and then have Bobby chime in.
I suspected you wouldn't, so that's why I said on Twitter. I said I'm not trying to throw red meat at Uriel here, but
no, I like a good argument. I mean, this is fun for me. This is what keeps me awake. That I wake up in the morning thinking, who can I piss off today? But anyway, so here's what I'll push back is that, so we've already destroyed how much in equity markets? $9 trillion. Again, before I finish this question, it'll be $10 trillion. The stock market's cascading lower. We've wiped out the crypto market, which at one point in time was $3 trillion, and now it's much less than $1 trillion. The real estate market has gone. Mortgages have gone from 3% to 7%. That's got to have a material and significant effect. You do believe, at least all I want is an olive branch between us on these opinions. There is a compelling argument on the other side as well. I'm not saying to accept that argument, but you get that could be a valid argument, no?
Of course. Absolutely. Okay. Okay. No. You always, and look, I don't think you're an honest investor. I don't think you're an honest American if you call yourself a Republican and don't bother to understand the Democratic platform, and vice versa. You got to figure this out. You got to understand where the other guy is. And this is what makes markets. You and I have made a living doing this. We have to figure out what the other guy on the other side of the trade's thinking, because he's right often enough, and he's making money when we just made the wrong mistake. So you got to understand your opponent. We're not opponents. I'd love to understand. It'd be wonderful if you persuaded me over there. I'm just not sure that this is ready to roll yet.
I get you, and I'm not sure of this either, by the way. The only thing I'll say before I bring Bobby in is that there is going to be a time, there has to be, there's a lag policy to rate increases. There's a lag policy to rate decreases. Yes. So there will be a time where they've moved rates enough and they won't know it because we haven't seen it yet. Right?
And they always go too far. They always go too far.
So they have to do that. Yeah. Bobby,
have they gone too far is the question. And that's...
So Michael, my questions tend to be my opinion followed by an am I right or am I wrong? And I'm going to try and actually just ask you a question instead of doing that. Fuck it. I'm still going to do it. So here's the thing. Mike, you're a strategist. I'm a strategist. Jimmy's a managing director. As strategists, I always try to tell people that it's not my job to say whether what the Fed is doing is right or wrong. It's my job to try and decide what they're actually going to do and how the market's going to react. And this is where I pushed back. I pushed back months ago against the pivot people, and I'm still pushing back because I think they're just telling us way too much that they're not going to pivot. I mean, if you want to make yourself look stupid, do exactly what they're doing and then pivot next week. Some say we're in a housing market recession. I'm not sure, being in Florida, if I agree with that, although maybe after this hurricane, it's going to hit us here too now. But from a perspective of, I'll use what Mohammed El-Arian said today, and then let you comment on it. He said that people are hoping for a pivot should be careful what they wish for, because they're not going to get a pivot without an economic accident. In other words, without something breaking. Right. Do you think it's possible to just sit, or do you think there is going to be, or we have a coming accident we haven't seen yet?
You know, Bob, I get worried on Wall Street when I see everybody start to move to the same side of the boat, right?
Yeah, I agree with that.
And they're thinking.
Yeah.
And that's what I'm seeing right now. I think we're all seeing this. We can all be scared. Everything sucks. The Fed is awful. Everything's awful. Markets are going lower. It's a bear market recession. Everybody. So we're all on the same song sheet here, and we're just arguing about the harmonies. People are moving to that side, negative side of the boat, right? In mass. You're in big danger if your side of the boat happens to not be the Fed side of the boat. You want to be in a safer place? I don't care whether you like the Fed side of the boat or not. Get over on the Fed's side of the boat. That's the place, Bobby, where you're going to save your ass, right?
So this is for Bobby. So don't they have to, up until, let's say, they're going to go to neutral or pivot in a month to 2 months, don't they have to keep talking tough and not show their cards? At some point in time, they have to completely reverse course, and that's going to come at a moment. It's not, Bob?
Well, I'll say yes to your first question. I think you're dead right on that. They have to reverse course. But one thing I'll say about this Fed, and Michael, I'd love to hear you tell me if I'm right or wrong on this. I think I'm right. This particular Fed, the Jerome Powell Fed, I think has done an exceptionally good job. Sometimes they spun on a dime, but they say what they're going to do, then they do it. It might be just before the meeting. Like it might be a week before, but I can't remember a time where the speakers and then Powell said something and then did the opposite. So I guess what I'm saying, Jimmy, is I think they need to say it first.
There's no question.
Until they say it, we don't have to trade it.
I think that's right. And I think they have been saying it. And you remember right towards the end of August, people were saying, oh, they're going to do a point. They're going to raise by a full point. I said, no, they're not. Well, but Michael, they ought to, no. They haven't said it. If they say that they have to sell it first. They cannot surprise this market. They're on thin branches here. This is one of the most aggressive raising cycles that I've ever seen, and they're sticking with it. So yes, at some point, Jim, they've got to come back and say, next meeting, we're going to raise by a half a point. We're being data dependent, and they're going to start, or they're going to say, maybe in 2 meetings, we're going to start to get to a lower rate of increases, and then we're going to skip a meeting or two. Whatever they do, they've got to presage it out there for markets. But so far, the only thing they're telling us is that they're going to stick to their guns. Jay Powell's a lawyer, and he's a Jesuit-trained lawyer. He's not an economist. So when this guy gets stubborn, he just gets that steely look. I've known Jay Powell for 30 years. Known him for 30 years. Jay Powell says, I'm going to walk through that wall. You think, yeah, right. But there you are. There's Jay on the wall, and there he is.
Okay, so tell me this then. Okay, so we've already had a currency incident in both UK primarily and in the euro as well. Things are bad there. Does the Jay Powell Fed give a shit about the world's currencies right now, or are they so myopic and focused on inflation here that they're willing to run roughshod over them?
I don't know that anybody can answer that. I'll speculate, but let's be really clear that I'm speculating. If I'm sitting there with Jay Powell and I'm listening to him, you're focused on inflation, you're focused on employment and unemployment, huge, big time, and inflation. Those are the two big things. And then you say, as an economist, I think, or a wannabe economist, which I guess maybe Jay Powell is too, a wannabe economist. I know I'm a wannabe economist. And you say, look, currency markets are very volatile markets. They have a life of their own. But the ones that you care about are so damn liquid, you can't really take a market pass at them. You can't do a Fed pass. You can't sit out there and say, well, we're going to buy dollars today. Nobody gives a damn if you buy dollars today. So it's a much broader, I guess, underlying current, which could move to front of mind, but I don't think it's there yet.
So when you say it could move to front of mind, like when Apple talked about less demand for the products of the day, Apple, I believe, gets more than 50% of their revenue from outside the United States. So it's not their mandate would, that's what prices and employment, but they might see things going on in the rest of the world as something that might be decreasing demand here if they're driving other countries, into recessionary pressures, right? I mean, that's where it fits into the puzzle, correct? Okay.
Yeah.
So what do people do then? What is the average guy to do? It's too late for, I know you on your show, and I'm on your show, and I love your show, the Farrcast starring Michael Farr, which by the way is a very, very good podcast. So you always say, what do mom and pop do, or whatever you say.
Fred and Ethel. I always talk about Fred and Ethel.
Fred and Ethel. They live next door to not the honeymooners. Who do Fred and Ethel? What are
Lucy and Ricky? How the hell
and Ricky?
Why does somebody have to tell you this? Everybody knows this.
I'm sorry. I do. I should actually have to tune out for the next 10 minutes and get some air. And you guys go, no, but what do Fred and Ethel do? They can't be buying. They don't buy dollars, right?
No, Fred and Ethel have to ignore all of this noise. They have to pray that they either own an S&P 500 fund or they've got their shares of Johnson & Johnson and Pepsi-Cola and a couple of solid names, and they just don't change a damn thing. They endure, they ride through. They're longer term investors. So I've always said Fred and Ethel, trying to talk to every man. I did have somebody call me a couple of years ago and say, Fred and Ethel were the ones who owned the apartment building in Manhattan. I mean, why are we feeling sorry for them? They were the landlords.
That's true. Right. Yes.
They were always like the poor cousins. They were the landlords of the building in Manhattan. Come on. It couldn't have been that bad for Fred and Ethel. But no, it's a stay the course thing and avoid this emotion. People get so upset. Our business is a wonderful feel-good business 80% of the time. 20% of the time, it's like this. And if you're really good to your clients, what you do is you talk them through this 20% of the time and hold their hands and make sure they don't do something stupid.
Okay. So, if you look at the seasonals, Bobby, I'm going to get one more in before I pass back to you. If you look at the 4-year presidential cycle and how the stocks move in that, it's really almost in lockstep as they have in the past, like September being the worst month of the 4. And then sometime in October, they start to head higher, and they usually head higher for the next 2.5 years until the presidential election. Is it interesting to you at the very least that they're following the exact same pattern? And do you think there's a chance that in 3 weeks, all of a sudden we get a whiff of something different from the Fed and start moving higher?
I think it's very interesting. I never bet against those old patterns. It always rhymes, doesn't it? Year after year, it always rhymes. Everybody wants to say, no, this is going to be completely different. It's never completely different. 35 years has never been completely different. And for every one of these recessions we've been through, at some point you come out the other side, and within a couple of 3 years, you're back where you were at the other highs, and then you creep up, and nobody believes it when it's happening, and it happens again. So, the republic doesn't end, and we get through this. This election cycle, could there be an event that actually helps where stocks could take off in late October? Sure. I don't, it would be easy to see the bear market rally, another head fake in here. I think until the Fed starts to signal that they're done changing the price of money, to loop back where I started, I just don't think that particular rally starts.
Bobby?
Yeah, Michael, really quick, I'm going to steal something from Cameron Dawson this time, who's a big fan of we're a fan of her. She's a friend of the show. Also suggest you have her on the Farrcast because she's just amazing. But I was talking to her this week, and she threw out to me that wages bother her a lot from an inflation perspective because inside wages is a built-in inflation expectation. In other words, you don't give people raises unless you think you can raise prices in the future to cover them, or you've already raised prices enough to cover them, or margins suffer. What do you think of that comment? Do you think we're going to hit the earnings recession she's calling for? Or do you think we'll just kind of the S&P is down about what? A little over 25% as of today. Do you think we're going to hit earnings recession that might push us down another few percent, or do you think we're kind of getting toward the lows?
We have been having margins for the S&P 500 like 2 standard deviations above the historical mean for several years. It's something I've been talking about. It has been fueled by the low wages for a long time, and productivity isn't keeping up anywhere. So I think that makes sense. I think that you run out of elasticity, pricing elasticity when you get in a cycle like this. You can raise the price of the Big Mac and you can maybe raise it twice. You make the price of a Big Mac $8 and it's not selling. So there is that point where people say, no, I'm not buying it. And there is that point when corporations all of a sudden reach this point, because Bobby, I think this is an excellent point. You reach that point of inelasticity on wage gains when they start looking at their margins coming down and they go, we're going to reduce this headcount. We will reduce this headcount.
Facebook.
We've got to keep this margin. So we're in that early part of the cycle where we've had the pricing increases. How many times can corporate America go back to the well and increase prices or reduce the number of potato chips you actually get in the bag? Because that's been happening. They reduce the number, a lot of things there. Don't get as many Oreos in the Oreo thing anymore. So fine, however they're doing it, you still reach that point. And I think that's still in front of us because it's a part of most every cycle. And yes, those wages will get kind of capped. The wage inflation starts to slow. That's why I said 5.5% unemployment. But yes, I think that that's exactly right. But I do think margins come lower. And I think that corporate America is going to react to it.
So you before talked about how there's stimulus coming in January in the form of Social Security. There's a couple things that I worry about too, and this goes against my thing that inflation is declining and we just don't see it yet. I always think the government, there's several things they shouldn't be doing to go counterbalance the Fed. One is borrowing and spending. They've passed two different initiatives in the last 6 weeks that are both highly inflationary. One, ironically called the Inflation Reduction Act, the other being student loan forgiveness. Wages they're trying to force up inorganically. They're talking about many different state governments, and sure, the federal government's close behind, talking about just giving money directly to people to fight inflation. I repeat that, giving money to people directly to fight inflation, which is just the most horse's ass thing I've ever seen. Of course they are. So do you think, I guess what I'm getting to is this, is that if at these elections, and again, I claim to not be political, I'm very policy oriented. If we can't get candidates to win elections who have more sensible policies, could you see a 10-year like the 70s slog that has the push cost inflation on one side, that has high unemployment on the other, and just we have all this nonsensical moronic shit?
I think there's huge opportunities for those who want to be nonsensical and moronic. This is your environment. Please come to Washington. Actually, everybody looks like you in Washington if you're nonsensical and moronic. Determined to stay in office no matter what the cost, it certainly seems. We'll do whatever's politically expedient and worry about the country later. I'm sorry to be so cynical, but I'm a fifth generation Washingtonian. I've watched this for decades, and it's gotten worse. So it would be great if we could get policy at least in line across government, at least in the fiscal and monetary side of the house, somewhere between the Fed and the Treasury Department and Capitol Hill, to say, can we actually go at the problems we're having? We need immigration. Okay, let's make it legal immigration, for God's sakes, but we need workers, and we've got to increase productivity, and we've got to have more degrees in engineering and science and mathematics, and we've got to try and compete with China, and we've got to compete with the rest of the intelligent world that's out there trying to kick our ass and starting to succeed. So this is about America, folks. Quit worrying about getting your ass reelected and see if you can do something good for our country. I'm really tired of your bickering.
Doesn't it almost seem like, I always thought that what you just painted was 100% true, but it's almost seemed to have morphed to something more sinister now. That if there's a problem that comes about, like from some sort of toxic policy initiative, they realize now they can effectively blame it on the other side, despite the fact that they caused it, and creates these weird perverse incentives. This is asinine. Let's pivot to energy policy real quick. Is that because it almost seems like they've seen a little bit of the light. If you take out, what was the woman's name who had all the bank executives in front of Congress last week and was trying to get them to promise to never lend to fossil fuel companies again? And Jamie Dimon told her where she could go. She had to leave. Yeah, Jamie Dimon was my freaking hero for that moment, which I don't have a lot of heroes. But do you, and Bobby, you're gonna have to answer this too, because you're more about energy than anyone to know. But Michael, do you think they're going to see God on energy policy at any time?
Only no, and as long as it's a political hot potato, they'll see it They'll say whatever's the politically expedient thing to say. You don't, I mean, any fourth grader can see the energy limitations and what we can supply and what we can provide right now. And we don't have to be Malthusian and go out for the next 30 years and say everybody's going to starve. Let's just look at the next 5 years. Is there any way that you can see to produce enough electricity for every car to be electric? We are an oil-dependent society. We just are. I'm happy to do the transition. You just can't sort of dictate this stuff happens as fast. So, no, I think their answer is going to continue to be political. And the more practical we can make it, the safer our country is.
Bobby, what do you think on that?
Well, first of all, I think we're getting a production cut next week from OPEC. I don't think, one of the things I know is the OPEC meeting October 5th, when you get these rumors that they're going to discuss something, I've gone back 30 years. And when they discuss something of that sort usually happens. They're better at leaking than Washington is. I mean, they leak their intentions and generally their intentions are confirmed. What Michael said, I think, is couldn't be more correct. From a perspective of energy policy, models on climate have been wrong over the last 20 to 30 years, maybe not as much as the right says, maybe the danger is as harsh as some of the center left says. But at the end of the day, we know that a certain amount of the population will starve and freeze if you try to do these things too quick. And it will likely be more than the 5-year window of climate change deaths that I think Michael might have been referring to offhandedly. From a perspective of energy policy, if you don't go natural gas and nuclear, you will never get off coal and oil without killing millions of people. That's about as plain as I can say it.
By the way, a plug for a book called The Way the World Really Works by, what's his name, Vaclav, whatever, he's a college professor. Do you know of this book, Michael?
Yes, I've heard of the book. I have heard of this book.
It's a short last name, it begins with an S. It's called Where the World Really Works. And he talks a lot about the four pillars of our society. And he mentions ammonia and urea, like synthetic fertilizer, and which really calls into attention what Sri Lanka did and what Canada is trying to do to take away the fertilizer that their farmers are using, which to me, that's, again, when you see things like that, you would at least understand my point of thinking it could be nefarious and sinister, right, Michael?
I mean, there's a lot to worry about there. I'll add one more thing, Bobby, to your point too. I was with a oil lobbyist who ran the House Energy Committee as a staffer, and he was the guy's a lawyer and he's dialed in. He's from Louisiana. He said, I think oil prices are going to go up in ways that people don't expect because of Russia, and the supply is really going to diminish. I said, why? Why is it going to diminish? They're selling all their oil. He said, they can't get it out of the ground. We've stopped the partnerships with Chevron and the other firms that were going over to Russia to help them manage that equipment. And they're not being able to buy replacement parts for the stuff that they're trying to pump. So now they're beginning to take from broken wells and trying to repair drill bits and things from they can't produce it without our technological support. The technological support is gone, and you're going to start to see a production cut out of Russia, not because they want to, but because they have to. You combine that with what's happening in OPEC, and that could be one of those surprises people aren't expecting.
So I have to jump in on that, Jimmy. I'm very sorry, but
no,
I have a friend of a friend of a friend of a cousin of a friend who actually,
I know him.
You know him?
Yeah, I know.
See, we're related, 6 degrees of Kevin Bacon. This guy actually does security for a bunch of Saudi oil ministers. They call him up and he puts on his whatever. I'm not going to talk about where he's originally from, but he does security for Saudi oil ministers. He doesn't talk much at all, but I did talk to him recently, and he did tell me that exactly what Michael just said is what Putin courting China is about. Because Putin somewhere deep down thinks China can manufacture a lot of the things he needs through either stolen technology or technology they already have. And this particular person said it's not going to work. But he said that's kind of Putin's aim. Now, I don't know who's talking to who that he gets that. But it's weird. A lot of the things he's told me that seem completely off the wall have happened.
So last time we were in a conflict with Russia, it lasted 40 years. It wasn't a physical conflict. Michael, is there a chance? Is this going to get resolved? It seems to me that the warmongers on both sides keep up in the ante slightly and slightly every time. Even today, Joe Biden gave a speech where he said they defend every inch of NATO. Why is everybody so staked in trying to rattle their saber?
They're getting very good at it and beats the hell out of me. I mean, you'd think Joe Biden with a little more gray hair would try to de-escalate, but perhaps you can't de-escalate with Vladimir Putin. Doesn't look like it. I mean, he went ahead and said, okay, this is that land that used to be Ukrainian is now Russian, and that's that. And anybody who attacks that land, even though we don't possess it right now, we're going to take that as an attack on Russia, and we're going to respond, including nukes. I mean, you don't say that kind of thing out loud. So I'm worried, Jim, that somehow we can't, somehow get this guy in some sort of a box, get a fence around him, and we don't seem to be able to.
So this may be the fastest I've ever finished one of these, by the way, with this conversation.
Is that the Angels Envy again or no?
Angels Envy again.
Nice.
Well,
I had one of those the other day.
Here, but.
And I did. But are you, Michael? Are you one of those guys who pretends to like bourbon too, just to make me feel stupid, or no?
No, Jim. I've never tried to help make you feel stupid at all.
Okay, good. Thank you.
I just like bourbon. And now I will tell you that I started out when I was 15 years old. I was bartending for my parents and grandparents who went out to dinner, and it was always Dewar's and water. And I thought, what is this Scotch still? So I drank a water glass of it at home one night, and that didn't feel a thing. Thought it tasted like hell. So I drank another water glass of it. Never had Scotch since. I've been a bourbon man ever since.
Hold it. There's a big enough difference between the two.
I smell Scotch.
But really, you can Bobby, you concur that there's such a difference between the two that you could be sick on one and still be fine with the other?
Oh, yeah.
I will tell you that Blanton's bourbon, which used to be $38 and now is like $7,000. I have one bottle of it here. If you put an ice cube in there and you just kind of, one of those big ice cubes, like one of these, this used to be a big ice cube. You swirl it around a little bit. It tastes like you're drinking a glass of caramel. I mean, it's so good. You put Scotch in a glass, I feel like I'm drinking my grandfather's feet. It's awful.
Because I did do a taste test last week, and I agree with you on that. Because those Scotch taste more like peaty, earthy, right?
Yeah, it's awful. Ugh.
Okay.
Michael, but when I'm in Scotland, and they start bringing the good Scotches out, then I like it. I can do that.
For fear of your life, or you actually like it?
Yeah. Well, it's cold, it's dark, the food sucks, so the Scotch, actually, by comparison, is not so bad.
Whenever I'm in a place with a different culture, I will at least pretend like I dig what they're doing. So I agree with you on that. Okay, Michael, before we can't, we got about a few more minutes, 10 minutes, let's call it, but we can't want to jump from the tallest building here. There's got to be some things that we can hook onto that are positives. Is there a place monetarily for people to hide out? Is there, what's the quickest, best resolve that could happen? And is it going to be in the election?
Look, there is an alternative now. We've been through the days of there is no alternative. There is an alternative. You can earn 4%. You might even earn 5% right now in fixed income. You can earn 4% in short-term treasuries. This is pretty good for the retirees who save their money and still have some left. It's not awful. So the 60-40 portfolio, I think that works again. I think discipline, and I say the same thing over and over, but strong balance sheets and some of those boring companies that just keep generating cash, maintaining market share that last, that aren't overly levered. God, I'll own those things a long time. I've owned Johnson & Johnson in my own account, I'm sure, for 30 years now. I love it. It's boring, but you know what? The value, what I paid for it, is way less than what that thing is worth now. When I started as a stockbroker, Jim, in 1987, and I would see clients' portfolios, and I didn't know my ass from my elbow, and they'd bring in the really rich people, and back then it meant anybody with over $250,000. And I thought that was big money back then to me. And those folks, they all had IBM at a cost basis of 2, and they'd gotten their stock splits. And they had Bristol Myers Squibb with this, and they had a couple of the regional Bells, which were still all of the different phone companies. Those folks had stocks they never sold. They took the splits, they got their dividends, and that's how they made their money. I fundamentally believe that markets have gotten way too short term, that if you want to really grow wealth, you have a core holdings of really good companies. You can screw around on the edges if you want to, but don't. Avoid that temptation. Own your core portfolio, have a little bit of fixed income, and then you just ignore all of this kind of noise. Because if the world doesn't end, you're going to make out in the long term.
So do you think, I mean, you said mess around money. Do you think 10% belongs in highly risky, not highly risky, but like tech stocks, NASDAQ, what the crazy cryptos, any shit like that, or no?
Okay, sure. You can be opportunistic, but you don't have to be, right? You can be opportunistic. You can have your core portfolio earning you 7% a year over the long term and be very happy with that. You want to try and juice it and see what you can do with 10%. If 10% isn't going to change your life, what the hell? Why not? You might get lucky. Yeah. I talked to a friend of mine who's got a significant portfolio, and he was always working on options around his portfolio, always options, calls and puts one way or the other, and he trades them. And I argue with him all the time. I said, why do you do this? Why? It just doesn't. End of the year, I want to see your total. I want to see the balance sheet at the end of the year, profit and loss on all of this nonsense that you do all year long, including your trading commissions and your capital gains taxes. And he goes, oh, no, I probably break even. I said, so why do you do it? And he goes, what makes it interesting? I'm retired. He's only 63, but he said, I'm retired. I love to gamble. You know, I love to gamble. If you'll bet me $100 on the golf course, I don't care what your handicap is. I'll play you all day long. I like to gamble. This is fun for me. I said, fine. That is a good answer. That's so much better than all of these other jackasses who want to say, oh, no, I've got an empirical study that shows me, well, really, I got 35 years that say that you don't.
Okay, so Bobby and I both know a lot of people who make money trading options. But that, again, when we're talking to you, I have my investment accounts and I have my trading accounts.
Yes.
And I use options in both, but I use options to express directionality. Bobby, where do you weigh on in this?
I do this. So first of all, Michael's been saying boring companies for as long as I remember watching him on TV. He's one of the most consistent guys out there. He's not like, I know I always say boring companies, but I decided to buy Snap. He doesn't do that, right?
No. Right.
Also, I want to throw in really quick, you don't have to ignore tech to buy boring companies. You just mentioned IBM, right? So I want to throw that out. The trading side of things, I tell people all the time, trading is a nice way. I'm going to say this from a Chicagoan's point of view, even though I live in Naples, Florida now. I used to always say that trading for me was a chance to turn my trip to the Wisconsin Dells into a trip to Paris or just stay home. And that's the way I always looked at it. I said, you know what? As long as and it comes from me blowing up early on. I mean, I blew up. I lost near six figures in my first experience with my own trading, and it wasn't all mine. Probably part of the reason I'm married to my second wife now. But from that perspective, I always looked at it like when I got back enough money to start trading again, I risked real world money in my trading account. In other words, specific example, Jimmy, you remember Mangino's across the street from the CME?
Oh, sure. Yeah.
Okay. So lunch at Mangino's, Michael, was about $11. All right. So I'd take a trade where I was risking maybe $1,100. And I said, okay, from this, for 100 days, I got to bring tuna if I lose money on this trade. I can't go across the street and buy a sandwich. I got to make a sandwich at home. And I'd say to myself, well, that's not fucking worth it. So I'm not doing this trade. Yeah. Right. Yeah. And that's how I gauged risk from that point going forward. And that's when I started to make money trading. But never was it a case of every single dime I make, let's do it again. Let's lever up. Let's put it all on back. It's never looked at it that way.
How are you down in Naples, Florida, Bobby? Tell me about, I have a house in Naples. That's where I live when I'm not, but that's my legal residence. Are you okay down there? How was it?
Yeah. First of all, thanks for asking. Jimmy's been reaching out all week too. So thank you for that, Jimmy. Second of all, make sure you reach out next time you're down here. Yes. Naples is really bad by the water. We're a little bit off the water, so we didn't even lose power. We lost power for about 20 minutes. I lost cable and internet. I'm just around 75 on Vanderbilt.
Oh, okay, fine. Yeah.
So, but the other half of my block lost power. The other side of my entire gated community lost power. Everybody lost cable. For some reason, cable and internet. For some reason, the 4 or 5 houses right around me didn't lose power. We lost for like 20 minutes. So we were extremely, extremely fortunate. We piled up on food, piled up on water. So we were fine. I have a family member lives on the water. tried to get down. He asked me, he's in Chicago right now, and he said, can you do me a favor, go check out my house? Drove down there, couldn't quite get to it, but we got all the way to the beach. And Michael, you know that wooden walkway from Vanderbilt Beach Road on to Vanderbilt Beach?
Yes, sure.
That's gone.
Oh, yeah.
The driver turned around, sunk into the ocean, and just Vanderbilt Drive as it turns into Gulf Shore is just a holy mess. But we are nowhere near what happened in Fort Myers, Sanibel. I feel for those people. My wife and I were just talking about
my house is on the water in Naples. My house is on the water in Naples, and my swimming pool is mud, but that was it. My cars escaped. That's everything.
Fantastic.
It's a I'm off a great road in Park Shore, and my neighbors have boats in their swimming pools. I have other neighbors who've been destroyed. 5 feet of water in their living rooms. I mean, this is and this isn't just like 2 or 3. This is hundreds, if not thousands, of folks down there. It's awful. I'm so glad you're okay, Bobby.
I appreciate
Terry's,
that.
Terry's near you too, Michael, right?
Terry's right across the water from me. I don't know how.
those?
Yeah, I mean, I look, he's right across. His dock is kind of catty corner to mine. His house is up a little. I don't know if it's up high enough.
I hope so.
Yeah. I don't know if you guys can see this, but this is one of the pictures that I took on.
Yeah.
Holy shit.
Yeah. That's just a boat that got thrown from one of the canals just up onto a lawn and up over it.
Everywhere.
What are you supposed to do? How do you anchor your boats down, Michael? Are people supposed to do that?
You know, I'm so fortunate. I've got a guy who's a commercial fishing charter captain down there, and he came and tied it up, and it floated off of my boat lift and was hanging just by the bow painter, hanging almost in the air. It was really difficult. And he took a crew over there yesterday morning at 10 o'clock, got it in the water. The engine fired right up. It's a miracle.
That's a miracle. That's amazing.
It's a miracle.
Yeah, it's amazing. So this is okay. A personal question to both you guys, and if you don't want to answer honestly, no. And I don't know what I mean. I've been looking at properties down there. Did this scare you about living there going forward? No, right?
It's like the guy
Michael,
who buys a house on a golf course and then bitches about getting hit with golf balls. I mean, come on.
Good question. Yeah, you're right.
Water in Naples, Florida. I got it. It's insured, but it's a risk of living there. It's a nice, and it is that trade-off. Yeah.
I look at it, Jimmy, like I actually lost more in property. Obviously, nothing happened here, so this is a very small amount of money. But I had more damage during the polar vortex when I lived in Pilsen in Chicago, simply because of repairs to one of the cars we had to leave outside at that particular time. Cost more than anything I've had to do here. Now, obviously, it's not the same, but crime in Chicago, taxes in Chicago, all of that stuff. If you're smart, full-time here to me, again, I have to say it's very difficult for myself and my wife because we kind of had a little bit of fun with it. Like we went for a walk in the hurricane. We're supposed to do two 45-minute workouts a day with this thing I told you about. One of them has to be outside. So we're like, well, let's put on raincoats and go for a walk. We were jumping in the air, letting the wind blow us back and stuff. And then, you get home and the cable comes back on and it's like, oh, Christ, I feel terrible for having fun, but didn't change me one bit. It's my first hurricane year, was almost a category 5. And yeah, it sucked. And a lot of parts of it were hard, but so much of my life down here is so much easier than it used to be. Like Michael says, just a trade off of living here.
Actually, I'm looking at a picture of Terry's house right now. So the head of Florida Power and Light is a guy named Eric Szilagyi. He's a very good friend of mine. And he called me about an hour ago. He said, I just flew over your house. I'm in a helicopter. I was up at Fort Myers Beach. I've come all the way down. I just flew over your house. I'm sending you some pictures. He said, wow.
I heard the helicopter.
Huh? Yeah.
I think I heard the helicopter about an hour ago.
Okay. Head of Florida Power and Light flying over. I'm looking at you can't tell. Terry's house looks fine from this.
I hope so. Yeah.
Yeah, I do.
Yeah. All right. What final thoughts before you go? Are you going to stay for the trades, Michael, or no?
I'm going to do what?
Oh, no. Oh, so I didn't tell you what the format is. Is that we usually I usually lie to the macro guests and say we usually have you on for 25 minutes or so, which is is it a bald-faced lie or a bold-faced lie? Who can weigh in on that? But anyway, whatever it is, we try to keep you on for 40 minutes with our rapier wit and charm, which I think we've done.
We've already done. It's 40 minutes now, but anything
40 minutes in. right? But now then the second part of it is we trade futures products based on either some of the things we talk about or technical analysis. You can stay on to tell me how stupid I am, particularly for the first one before you hang up. That's okay.
I'd be happy to listen. I can provide absolutely no value on those sorts of trades, but I'd love to listen.
Then you can hang up if you want. You got a lot of real life things going on. You got a house.
No, I really don't.
Okay, really then yeah. I wish you had a drink. The only reason I don't is because the fridge was empty. Okay, this is a bearish trade on yields, which based on both of what you guys said this whole time, you think I'm absolutely a moron. But again, it's a trade and things go up and down, and it's mostly technical. The fact after the 2-year hit, whatever that high was, let's call it maybe 4.25. It seems to me to have been run out of steam a little bit. And the CME now, Michael, has yield contracts, which, like normally a bond, you buy a bond and think rates are going down, you sell it, but they trade with the way of yields. And we both, Bobby and I both use them and like them. So I'm looking at the October 2-year yield contract. If it trades down to 4.11, right now when I last left it, it was about at 4.19, 4.20. If it trades down to 4.11, I think that's a spot to short it on a stop in trade, because that will mean to me that I'm becoming more right in that the Fed's becoming more worried, with the target down at 360 and a stop placed up at 441. Again, if it doesn't get to 411, screw it. I don't want to be in this trade. Bobby, what do you think first?
So your entry's great, because if it does get down there, I've got it about 426 now or so. I might be wrong. If it does get down there, it'll be triggering a double top, which is just a really good trading pattern. But your target, to me, is too low. You'd have to go somewhere closer to about 390, 385, in my opinion, on the 2-year, because it might hold up there, but it might not. If it breaks down past your target or toward your target, I think you get a lot more. I think there's been some sort of an event.
Michael, do you think rates could go lower from here?
Sure. I think that we'll have that pullback lower trade, but not meaningfully lower. No, I don't think that 2-year treasury, I don't think that 2-year treasury gets below 375. No.
So what if I pose this question to both of you guys before we go on to the next trade? What if we see, because we broke those June lows, what if we see a nasty spill out? Like the one, I always, don't shoot till you see the whites of their eyes, to me is like, don't go all in bullish until you see what print in the VIX. Would that be a 55 print in the VIX? What if we all of a sudden see the big spill out? Is that going to change the Fed, Michael?
Is it going to change the Fed? That's a good question. Not much is going to change the Fed. The political pressure is already increasing on the Fed. See, I mean, the loudest drums in Washington are beating to just roast Jay Powell, because they had nothing to do with all this inflation, all those politicians. No, this was all the Fed. This was all the Fed. It had nothing to do with the stimulus, had nothing to do with the votes, had nothing to do with none of that. This was all the Fed, and they're all going to roast Jay Powell. So as he sits there and puts his hands over his ears and starts going, la, 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 what will actually get his attention? I'm not sure, Jim.
So I don't know, maybe 10%.
So using your description of Jay Powell on more of a personal level, Michael, I now feel more strongly about what I thought before, because my thought was that weird meeting between Janet Yellen and President Biden, Treasury Secretary, President of the United States, and the head of the Fed, that lasted all of about an hour and a half. And then Powell walked out, and within days, he was like, yeah, we're fighting inflation. In my mind, I imagined being a fly on the wall and having Janet Yellen and Joe Biden say, look, we're going to blame you for this. Just want to let you know. All right, fine. Fuck you guys then. I'm going to fight the thing you're going to blame me for, so that down the road, history's kinder to me. And if he's as stubborn as you say he is, I could totally see that happening. And he wouldn't be wrong. There's been a bunch of us that have been just screaming at the top of our lungs, Federal Reserve, please stop doing these things and get out of the way. And now they're trying to, quote unquote, normalize, and none of us can believe it. I mean, I don't know what to think of that, like from that perspective. But I do think that, as traders, we called it back and fill, right? So I think you could see back and fill in a lot of these markets, but I just don't think it's going to change trends short term. 55 VIX, I don't think the stock market changes the Fed. I think it has to be broken markets somewhere, specifically credit markets or something overseas.
So I have to go back and look how it traded today when we broke through the lows, how yields did, and I will over the weekend. But for those of you who trade these products too, if that 2-year, that October micro 2-year, if you sold it at 411, took it down to 360, that's a gain of $510. If you got stopped out at 441, that's a loss of 300. Bobby, do you have a trade today or no?
I do, and I hate it, but I have to do it because my process tells me I have to do it. So
right.
I'm going to actually, this is another stop in. Michael, by the way, we use stop ins a lot on the show where we're trying to catch moves back in the other direction. So I'm going to stop into a short December micro Euro FX sale of that around 98.09. So if we break 98.09, I'm looking for 95.42. And I hate it because of how far we've gone and how historical the prices are, but we got our back and fill in the euro already. I mean, it backed up to basically support, or resistance rather, used to be support at about 98.94. We actually broke through that today. So if we go back down, I think there's another leg lower. A catalyst for that in theory could be that these ECB minutes next week are more dovish than people thought. Lagarde speaking again next week. She could be less convincing than Jay Powell and his crew. But I just don't like it because of how far it's gone. But this particular trade, target 95.42, stop of 99.65. It's going to risk about $245 per micro contract to make about 337.75.
Yeah, well, that's the opposite of my yield trade, which, by the way, is going to be the same as my currency trade too, which is also stopping. So in my mind, one of mine is going to hit and one isn't. But I'm perfectly fine with that trade, particularly on a technical basis. Michael, do you have any thoughts on currency markets?
Well, look, as the guy who doesn't do any of this, I do follow all this stuff pretty closely.
No, you do.
And I think that euro trade actually makes sense. I think, yeah, that feels right. I think that longer term trend is down. I couldn't tell you anything about the trigger, but could it easily make a new low there on the euro? Yeah, that's the direction, path of least resistance.
So that's leads me to the final trade, the third, and it's basically the same as Bobby's, but just in the British pound. But they've been moving in tandem. Some of them take the lead a little bit too. So this is right now it's about 100 ticks below where the market is right now. So selling the DEES micro British pound on a stop in at 1.1030 and targeting a move down to 1.0600, which is above those old lows, but not too much above them. And then a stop out at 1.1250. So that trade would make, what is it, at $268.75 if you wrote it to the low, to that target, and loses 137.50 if you get stopped out. It's essentially the same trade as Bobby's. And what it is that, again, we rallied the pound like 6 pounds in 2 days. I mean, 6% 2 days. So again, to me, if that's just a knee-jerk volatile reaction, and the real story is higher rates, higher dollar, problems coming up in Europe. So I basically, based on the things you've said, I inferred that you both agree with this trade as well, correct?
Yeah, I definitely do. I mean, it's the same sort of back and fill trade. We got a nice little back and fill, 4 straight sessions higher for the British pound futures, right into Mike Arnold's rotation zone. Mike Arnold is our technical strategist. He's ridiculously good at this stuff. So it's right into his rotation zone. I think it's good. I think it's a good trade. I think that trade will work.
All right, I'm going home. I'm going to the bar.
I got one more I have to throw out before you do your girlfriend hang up thing, Jimmy.
Okay, good. Thanks for stopping me.
Yeah, for September 10th or September 9th, whenever that podcast was, I sold crude oil last week. So that would make me short. I'm short crude oil from about 89.60. That's WTI. And I told people I adjusted my stop last week to make my stop profitable. I'm going to get out of that crude oil trade before the OPEC meeting, win, lose, or draw, because I just don't trust OPEC.
I'm so glad you brought that up, because when you mentioned OPEC before, I was going to ask you to change your mind. And remember, I'm
going to get out of that.
Right. I don't know when they're going to start buying back or stop selling the SPR and start buying it back. But if I had to just ballpark a time, I would guess maybe November 9th at 8 a.m. might be a good time to stop. So just again, that's a guess. I don't know when they're going to do it. That's when they may stop selling the SPR and then have to start worrying about filling it back up again. And I think that could drive crude prices higher. Again, what do you got, Michael? Anything to close us out?
I think you guys are brilliant. What a fun podcast this is. It really is.
Yeah.
This is fun.
Sometimes it gets too fun, right?
I only got through one, so you guys didn't impress me that much today.
I got to head to the bar right now. Thank you so much, Michael. And at the end, one of the things I always talk about is on these Zoom calls, whether they be podcasts or not, nobody knows when to hang up and nobody wants to be the first one. So see ya.
See ya.
Where can people find you if they need to find you? Want to know where the podcast is, Twitter handle, whatever you want to give out.
Let's see, mfarr@farmiller.com. And it's the Farrcast. And you can just Google the Farrcast. We're out there on everything. So,
and you're on Twitter and everything too as well.
I'm on Twitter, Michael_K_Farr, Michael_K_Farr. And I can't remember all that other social media stuff. I'm on LinkedIn. I do all of that stuff.
Twitter and your podcast is enough. They'll find you.
Yeah, there we go. All right. Bobby,
Michael, thank you so much.
Okay.
Pleasure to talk to you.
Okay, bye.
Bye.